Hi everyone, welcome back to my channel. Today I'll be reviewing the positions in my Roth IRA account as of the 26th of May 2023. So as you all know, in my Roth IRA account, I am working on a beat SPY strategy. Essentially, I am trying to beat the returns of SPY with selling additional covered SPY calls. So I started on the 31st of January. I bought 100 shares of SPY and I keep selling one covered call at a time. And the goal is to generate additional 6 to 10% of profit in the next 11 months. So far, about 4 months, January, February, 4 months into the strategy, uh, the profits are about 3%. So we are well on track to meet the target. I'm putting in leftover cash into high dividend stocks, Starwood and Rhythm, but I'll be mostly ignoring this part since it's not relevant to our campaign. Okay, so here are the trades I've made so far. As I said, on the 31st, I bought 100 shares of SPY and I sold one covered call. And then the call expired. I sold another call that I bought back and sold another call, bought it back, sold another call, etc., etc. I also got a few $100 or $150 in SPY dividend, and I reinvested that into the SPY shares. And last week, we bought the call expiring last week. The strike price was 420, and I started a new position selling a covered call with a strike price of 426, expiring on 2nd of June, which is a week from today. And you can see each time we roll the calls or we buy back the old position and create a new position, I always get some positive income into the account. And that adds up over time. So last week, I just rolled to a new position, right? And then SPY closed at around 418, and the covered call that I sold was trading around 130. The covered call was at 426, so that's about 2% out of the money, and that's exactly where I want to be. So today I actually was monitoring the position, thinking about rolling the call to later expiration, but essentially it was not the right time. So I grabbed some screenshots after the close, and you can see that the position that we have is trading around $1.06. And what's most important is the theta of the position is 33 cents. So essentially that says that in a day, the call will lose 33 cents in the value, which is actually good for us, right? Because we are short the call. And compare that even if I rolled to the same strike price 1 week later, you can see the theta there is only 19 cents. So essentially, the decay in the later expiration call is much slower. So right now, since most of my profits come from the time decay, there is no point rolling to later expiration. And you can see the expiration 2 weeks later even, the theta is even smaller. So at this point, I'm happy with my position where I'm at. I get the most time decay, and I may reevaluate as time goes on or next week. One thing, like anytime you roll to a later expiration, you're essentially adding risk to your account because now the underlying has 1 extra week or 2 extra weeks to move against you or to do something unexpected, right? So that's the risk of selling covered calls. So far, we've been managing it pretty good. And so I want to keep it that way. And this is another reason why I'm staying and keeping my current position expiring a week from today. Okay, so this is the account right now. You can see I have a little over 100 shares of SPY. That's the original 100 shares plus the dividend. And I'm short one covered call. And the others are positions in Rhythm and Starwood, which, as I said, I'll be mostly ignoring. So how did the market behave? Well, so last Friday we rolled, that was right here. And after that, the market actually sold off because of the concerns about debt ceiling, right? And disagreement between Republicans and Democrats on what the budget should look like and how much debt should US take on. So the negotiation didn't go well. So Monday, Tuesday, Wednesday, the market sold off. Then Nvidia had really good earnings, and that helped the entire market to move up. And then Friday, it seems like the negotiations are finally leading some results. So the market was happy, and it pretty much moved back to the resistance. The resistance has been for a while 420, and I am really expecting once the debt ceiling gets approved and the new budget gets approved by both House and Senate, then I'm expecting SPY to charge up. When it happens, I don't know yet. It will still take, even after the negotiations are over, it will still take a few more days before the Congress will agree on everything. So here are the numbers of the detailed numbers every day, how my position behaved. I added a new column, and that makes it a little more clear what's going on. So you can see I started with the strike price, so that's the strike price column, right? So the first option I sold was the strike price of 413, and from that we got $317 of cash, and you can see the price went up and then gradually down, and then finally here it expired worthless, right? And then I started new position with a strike price of 410, and another position with strike price of 407. And each time, as I said, I roll from one call to another, there's extra cash coming to my account. So this is the total cumulative, right? And here, this is the total profit from getting the cash into the account and the calls kind of expiring worthless. So since I added a new column, I'm kind of presenting all the data, but normally I just show the most recent data. So this table is till the beginning of March. This table is from the beginning of March till middle of April, but kind of the same thing, right? Here I actually rolled into the same strike price, but it was a new trade. So again, we got a little bit like $60 going into the account. Here, new strike price. Here also new strike price. And finally here, this is the table all the way till today. And you can see as of today, so last week we rolled into a new strike price, got about $130 into the account. And again, the profits are going nicely up. Right, so this is my total profit from the covered calls so far this year. So in the last 4 months or so. So 1,262, that's about 3%. That's very nice extra income on top of the returns that SPY is producing, which we can see here. Right, so far SPY returned about, a little over 4%. So that's very nice. So in combination, 4% from SPYs, 3% from the covered calls. So this is over 7% of return. So I'm very happy with that. Here, I think it's the last daily chart that I'm showing. You can see the bars are getting thinner and thinner, but you can see again, the most important is the yellow or gold color. Initially, the covered calls plus cash, we were losing some money, but ever since the beginning or the middle of February, the calls are quite profitable and generating nice profits in addition to profits from SPY. So from now on, I'll probably be showing you this chart, which is kind of the same chart as the one before, only this is weekly prices. So every Friday or every last trading day of the week, I just look at the snapshot of what the SPY and the calls and the combination, what they are doing. And you can see here the total profit from both SPY and the covered calls is close to $3,000, right? That's right here. And you can see it on the previous chart, the same thing here, right? The total profit from SPY plus the covered calls is close to $3,000. So really the same two charts, just different time scale. Okay, so what are the plans for next week? So I really hope the Congress will approve the new debt ceiling and the budget adjustments, and we can move on. And once that happens, I'm expecting the markets to go up. But it's also possible that it's already baked. The news is already baked into the market, and they are all expecting that the deal will get done. So the move up may be limited. My covered call is expiring in just 1 week, so no matter what, I must roll it or at least close the position. And so most likely I will wait till Friday to do anything. Again, I will monitor the position, and as I said, I'm expecting big move for SPY, and this is why I'm trying to keep the expiration dates nearby, because that really limits the risk. And I want to keep my SPY position. I don't want the options to get exercised and my SPY shares to be called away. That's all for today. Thank you all for listening and watching. If you like the presentation, please click the like button below. Just a couple days ago, I completed the presentation on covered calls, how to sell them, when to sell them, things like that. So look for it in our option school. And until next time, happy trading.